Welcome, everyone. Today, we're diving into the powerful market rally that happened on December 18th, 2025. This was a really big deal, a day packed with major catalysts and some surprising turns that finally snapped a 4-day losing streak. All right, here's how we're going to break it all down. First, we'll set the scene for this big rebound. Then, we'll get into the two main engines that really powered the recovery. After that, we'll look at the hard data, see what the experts are saying, and then we'll figure out what this could mean for your next move before we get to our final verdict. So first things first, let's just set the stage for this pretty dramatic turnaround. The market was feeling pretty bruised after 4 straight days of losses, but as you're about to see, that all changed in one single powerful session. So that's the big question of the day, right? The market was on edge. It was on a tough losing streak. So what happened? What suddenly flipped the switch and sent stocks soaring? This table really tells the comeback story. All 3 major indices finally broke their losing streak, and the S&P 500 put up a solid 1% gain. But the real star of the show was the tech-heavy Nasdaq. It just had a very, very strong rally, pushing back toward that big 20,000 number. So what was really behind this powerful rebound? Well, it turns out this was no fluke. The market got a major shot of energy from 2 huge pieces of news that honestly hit at just the right time. And here they are, the twin engines for the day. On one side, you had inflation data coming in cooler than expected, which gave a sigh of relief to the entire market. And then on the other side, you had these absolutely explosive AI earnings that gave the tech sector a massive and, frankly, much-needed jolt of confidence. So let's talk about the number that really lit the fuse. The November Consumer Price Index rose just 2.7% over the last year. Now, that was way below the 3.1% Wall Street was expecting, and it marked a 4-year low. This was pretty much the green light the market had been desperately waiting for. And here's that second engine just roaring to life. Micron didn't just beat what analysts expected. They completely shattered expectations. Get this, they announced that their entire 2026 supply of high-bandwidth memory, which is that super-fast memory you need for AI chips, was completely sold out. Their stock just took off, and it validated the entire AI hardware story. And beyond those 2 main drivers, we had some real wild cards in the mix. Trump media went through the roof on a surprise merger with a nuclear fusion company. Yeah, you heard that right. And cannabis stocks lit up on some big policy news. These other stories just added their own unique flavor to the trading day. Okay, so let's see how these powerful headlines created ripple effects across all the different markets. It's time to follow the money. You can really see a clear split in how different sectors performed. Consumer discretionary stocks, the ones that are really sensitive to how the economy's doing, they surged on all this optimism. Meanwhile, energy was the only sector that finished in the red, mostly weighed down by some concerns over global oil supply. Well, all this hope for future rate cuts sent the US dollar lower and pushed Treasury yields down. And that is fantastic news for growth and tech stocks because, simply put, lower rates make their future profits look a lot more valuable today. And, just to top it all off, we got another piece of really good news. Jobless claims came in exactly where they were expected to. It paints this perfect Goldilocks picture of the labor market. It's holding steady, not too hot to spark more inflation, but not too cold to signal a recession is coming. So, with all of this action packed into just one day, what are the experts saying? And what other global issues are on the radar? Let's get a feel for the conversation out there. We're seeing a really interesting split in opinion here. You've got the bulls saying lower rates are exactly what big tech needed. Then you have this very cautious warning from a giant like Vanguard about the AI hype maybe getting ahead of itself. And then a more tactical stock picker's view from Paul Meeks, who's basically saying, hey, don't chase this rally in Micron. So the mood of the market really became this mix of relief and renewed greed. After 4 days of selling, there was this huge sigh of relief across the board. But that was immediately followed by a sharp return of greed, especially for tech stocks, as all the dip buyers jumped back in with both feet. And the VIX, which is the market's fear index, totally confirms this shift. A 4% drop shows that fear is definitely calming down as the market starts to find a more stable footing after all that recent turbulence. Okay, so let's bring this all home. Based on today's crazy action and all these conflicting expert opinions, what are some of the potential playbooks for investors right now? For anyone with a higher appetite for risk, the aggressive play here is to double down on this whole AI hardware story. The bet is that Micron's amazing report wasn't just a one-off thing, but a signal of a massive, ongoing demand cycle. The big risk, though? That the inflation data that sparked this whole rally was just a fluke. Now, on the other hand, a more stable approach would be to take some of those profits from the high-flying tech stocks and diversify into things that offer a bit more protection, like bonds or quality value stocks. The big risk here, though, is an external shock, like a surprise move from the Bank of Japan that nobody sees coming. So, after weighing all the evidence from this really pivotal day, what's the ultimate takeaway? Where does the market actually stand right now? Well, the day really leaves us with a very clear conflict. The bull case is simple. Inflation is cooling down, and corporate profits, especially in AI, are incredibly strong. But the bear case is just as compelling. That data might be flawed, and there are still some major global risks lurking out there. One analyst captured the day beautifully with this metaphor, and I think it's perfect. The fog? That's the questionable economic data, the uncertainty about inflation. But the powerful engines? That's the undeniable strength of corporate earnings, perfectly summed up by Micron's blowout quarter. And that leaves us with the final crucial question. The engines of corporate earnings are roaring, and the market is lifting off. But is this the start of a sustained year-end rally with clear skies ahead? Or is this just a temporary break in the clouds before we fly into even more turbulence? Thanks for watching.